Today is an emergency video we had to release really quickly. Everyone's seen the breaking news. Labour wins with a majority vote. I don't think this was a shock to the system personally. I think people were expecting this. When you look at the bookies and everyone else, the expectation was there. But Labour are now in Parliament, and now we have a Labour Prime Minister. Jay, what does this mean for property investors, developers, and also property traders?
So the Labour Party election manifesto outlines several things. So just quick cap, we have house building and planning, we have first-time buyer support, we have leasehold reforms, we have the renters' rights, homelessness and environmental protections.
Great. So just to go into the details of each of those points. Number one, the house building and planning. So Labour promises to build 1.5 million homes over the next 5 years of the Parliament. And basically one of the things that we expect by the end of July is, that was in the manifesto, was a new draft national policy framework. Because in order to build 1.5 million homes, there needs to be some major changes to the planning system and how things operate. And that's one of the things that Labour promises. Which can be a really good thing for property market, property developers. So that's number one. Number two, first-time buyer support. This is a little bit confusing because there are two things to it. They want to create freedom to buy, which is a little bit like Help to Buy in the past, to allow first-time buyers to get onto the housing ladder. And at the same time, there will be probably some changes to the stamp duty and the thresholds to not pay the stamp duty or pay lower stamp duty will be really lowered down from 425 to 300. This is something that we kind of expect as well. So it's a little bit of a mixed signal. Then leasehold reforms. We talked about this in one of our other videos, but Labour intends to abolish the feudal leasehold system. And by banning new leasehold flats, promoting common hold, and as the standard for the apartment blocks. So that's one of the things that, again, we expect will be a continuation of the Leasehold and Freehold Reform Act, and probably going deeper into the details. Then renters' rights. Labour is really big on renters' rights. It's obviously a workers' party, and they want to support the rental system and people on kind of lower wages. They want to ban no-fault evictions. Going to be pretty much almost certain. But one of the things that could be worrying for property market is that Labour may want to go into the extreme policies such as rent controls and stuff like that. I think that would be very worrying for the property market. But if they keep to the center and the center opinions, I think things should be okay around that. So Labour also tries to tackle homelessness and promises cross-government strategy to end homelessness. I don't think they will need much of a cross-government thing with that kind of majority that they have, but those are kind of important points that they promised. And then environmental protections. While promoting house building, Labour commits to protect natural spaces, so the green spaces and kind of building things sustainably. We will see what exactly that means, but at the moment, this is what we know. This is the kind of stuff we expect by end of July to kind of see unfolding. The first 100 days of every government is really important, and I think Labour will want to kind of come with some powerful proposals.
Yeah.
Do you guys think?
Piotr, what does that mean for property developers, right? So when you look at property developers in general, you've got the bigger guys who are basically land banking at the minute. I think that's quite a positive thing for people that are land banking, because obviously they're going to bring a lot of their land forward probably quicker than they thought they were going to do to develop. But I still think for the small to mid-sized developers, there's not really going to be much change, because the biggest issue for them is the build costs. And the build cost is a variable that the government cannot control. Obviously, inflation is a factor, but I don't think there's something that they can control. So I still think from a development point of view, although there's a lot more positivity moving forward, I just can't see there being massive major changes that's really going to impact the SME developers, which make up a decent part of the market right now. I think for property traders, they're going to absolutely love this, embrace it. They're going to, we love trading ups and down markets. So when a market goes up and down, it's good for us to be able to negotiate better deals and then also sell the deals. So we really, really like these kind of uncertain markets, as we call them. The only thing that traders need to be mindful of is, I think it's going to get harder to buy over the next couple of months, because clearly the elections created uncertainty and it was easier to buy. Now the elections are over, you can see as of today, the FTSE this morning's up, the sterling's up, everything's quite stable. And I think that's because the expectation was Labour, and that's what happened. So the market just got what it was expecting. So I think from now on, property market is going to be quite stable. And I think we're not going to necessarily see 2021 to 22 play out, but we're going to see it play out over a longer period of time, maybe a 4 or 5 year stretch potentially. So that's positive. And then I think for property investors, look, with all the negativity with Labour, let's be completely honest, they're not the best government to have in power if you're a property investor, but we don't have a left winger at this point. And to me, that plus the fact that we have a market that very much is dependent on supply and demand, and we have such high demand and such low supply, when you look at the grand scheme of things, I think we're going to be in a pretty good position. One thing that someone was talking to me about this week was having social housing supported living gets around all of the kind of Section 21 abolishment and all of the rights that landlords have as ASTs or won't have as ASTs under Labour government. So that's maybe something that property investors need to start thinking about, is a commercial lease on a residential property. It's a hybrid, yeah? It's not a commercial asset, it's not residential. It's kind of a commercial lease on a residential. So those are my points. Jay, any thoughts from you?
So there's a lot to be said here, but the one thing that, talking from a trader perspective and thinking about opportunity more than anything else, I think back to the impact that stamp duty changes and stamp duty holidays have had in the past. And I sit there and I think, this is where the opportunity really lies, right? There used to be a spate in the auctions where a property that's worth, someone says on their bidding sheet they think it's worth 250. It would be selling for 247, 248 and 249 to stay below the stamp duty threshold, right? When the stamp duty holidays were happening or coming to an end, or the change to multiple dwellings relief that came in, this really does actively and tangibly change people's ability to bid, the price that they're willing to go to. Because if you know there's a threshold, you're going to start buying stock under the threshold. You're going to start trying to pick up things at the 297, 298, 295 mark instead of £300,000. Obviously doesn't really affect us as traders in terms of our ability to buy, but what it does affect for a pricing strategy is people who are going to be buying it from us, their ability to buy, their cost metrics that are going to be affected by that. The other thing that I want to touch on that point is, I was talking to people that are really big into HMOs, buying them, selling them, converting houses into HMOs. And you'd be surprised, probably not you, Saiful, the vast majority of people listening, but definitely I'm surprised, that actually there's a whole secondary market for HMOs. And that secondary market is pretty much led by international investors, Chinese investors, Russian investors, whoever else. So that increase of stamp duty, I think, is going to have a real impact on the value of HMOs, at least the ones that are being built, bought or converted.
Is it around 1%? They're trying to increase it for foreign nationals by 1%.
For foreign nationals, I think if they get that through, I think that change is going to be. It's not really going to affect the multi-million-pound houses in Belgravia that are being bought by oligarchs around the world. They don't care. But for people looking to implement cash from abroad, whether they're in China, Russia, Nigeria, Sudan, doesn't really matter, wherever they're from, that additional 1% will have to be reflected in price, because you saw that there was a change in that kind of HMO buyer market in the last 3 to 4 years, and I think that's going to take another kicking.
That's interesting.
The other thing I think is
on that behavioural habit, Jay, just before we go to the next point. I remember very clearly there was an estate agent that listed a property for £65,000, and someone walked into the estate agent and said, "Can I buy it for 75,000?" They said, "Well, it's listed for 65," and they said, "Yeah, but I can only get a mortgage from 75 onwards." And that's the behavioural habit that you've just talked about. Is it's not about the price; it's all about these metrics. But yeah, interesting point.
there is kind of like it's almost like a social engineering price point, right? It's one of those things. It has no reflection on the the property's value, but these are little kind of things that will start playing a psychological element in people's minds when they're looking at, can I pay this much for it? What's my transactional frictional costs around these deals? So I think there's going to be an element to it. I don't think it's going to be a drastic, people are going to start offering 10% below and all of that kind of craziness. But it will change the metric somewhat. The second thing I think is interesting is, and Labour seem to be pretty good at this at the moment. They don't say much, but whatever they do say just seems to be a rehashing of a term or phraseology that's already in place, freedom to buy instead of help to buy. It's going to be the same kind of thing. My point isn't on that. My point is on grey belt. So grey belt is essentially green belt that has been previously developed for whatever purpose. And they've given examples of car parks and things like that. But, developed green belt are things like agricultural buildings. We all know Paul Higgs has done that big development, I think 7 or 8 houses on what used to be former agricultural buildings, now into luxury accommodation that are biophilic and all that kind of stuff. I can see more of those types of developments going through. The ones that are kind of outside of the development envelope, previously built up, run down, where they are prime and ideal for some kind of environmentally sensitive development. Whether that's a composting toilet or a microgreen roof or whatever it's going to be. So I think that's going to be really very interesting. And there's a lot of kind of noise around that. Are they going to keep the green tariffs in place? Is the phosphorus thing is going to still be an issue? How are they going to build 1.5 million houses in the next number of years without really putting a real heavy strain on the environment?
Yeah, there'll be some contradicting things. Like if you want to build 1.5 million homes, you will have impact on the environment, and they will have to find very quick ways of how to marry up those two kind of things. Looking forward to seeing those policies. As always, the devil is in the details. The promises are the promises, and we're going to see from the actual proposals, policies, how things are going to be affecting developers, how things are going to be affecting investors, how things are going to be affecting tenants, and also people who are first-time buyers. So everything is in the policies that we expect to see by the end of July, at least some of them, and then in the first 100 days of the government. I'm not sure how many kind of those 100 days are working days for the government and the parliament, because I know the parliament goes away in August for like a month holiday, right? So not sure how this is going to marry up with the speed they want to act with, but we'll see. I think the main point is probably keep doing whatever you're doing. Usually governments don't really change as much as we think they might be changing. It's mostly the actual impact on real people is much lower. I think what is in our control is more impactful, and our actions are more impactful than kind of any kind of policies from government. So I think we should be just being mindful of what the policies might be, but doing whatever we're doing and doing it in a good way in order to...
And remember as well how slow government moves. There's a huge lag effect, like huge. When they say 6 months, it's probably more like 2 years. So I think whatever happens, I probably started doing this about 5 years ago. I stopped listening to the news and the media and reading every single thing. Obviously, COVID was a big one that had a huge impact. But other than that, realistically, I just crack on as normal, because since 2015, I was always of the mindset that what happens if we get into an economic or financial crash? What happens if? And now I think by the time you get to that point, you would have made so much money anyway. You deal with it at that point afterwards. So business as usual. Use it as a bit of a hook if you want to speak to people about the uncertainty to negotiate better deals. Absolutely. But I think I'm very, very bullish about the property market over the next couple of years for sure.
Amazing. Okay, guys. Well, if you
Cool.
enjoyed this video, make sure you share with your friends, your other investors, other traders, and also make sure you subscribe and follow us for more content like this. See you next episode.
Cheers, guys.
See ya.